Hi there, traders. This is Brad Gilbert with today's trading action. All right, now we've seen the market, the Fed's cut by 0.5%. As expected, immediate weakness on that outcome. And you can see most of these instruments spiking on the announcement. And as I was sort of saying yesterday, whether it was on the Discord or even in the video, that the real move will come from the statement and the press conference, right? Of course, we know what the immediate impact is, but the following move afterwards, you don't know what it is until they come out and start talking. Now, what do I think from here? As I said, sort of said yesterday, they've cut by 0.5. We've seen a ricochet in the market. Jerome Powell says there's no sign of recession and these sorts of things. We're under control, but we are cutting. So to me, this is a flush out, and I'm very confident now, looking to get short dollars wherever I can. Right? It's so just redraw your trend lines. Keep an eye on the bull bear pivot lines, anything that's going to give you an angle here, because I can see the dollar rolling over big time. And like, I know there's a few traders out there that think I go and redraw trend lines just to suit the market, but we've had two resistance trend lines here in dollar yen for some time, right? We've had a bit of a break there, an Ichiban break trade through the top of the cloud and the resistance there. But funnily enough, where did it stop? Right on resistance at the top line there. To me, if you're not really sure, I'd be looking to get, this is the last sort of bottom of the cloud to get in, or even through that bottom level, but it'll have less direction there. Basically, I can't sort of tell you enough that, I've seen this, I've been trading for 35 years or coming up to 36. This is what happens. There's a flush out, the immediate reaction. Now, the fact is the Fed are cutting. They've cut by 0.5. Now that will be factored into the markets. And then you sort of come back and have a look at where we go from here. Well, they are talking there's going to be another 50 basis point cut before the end of the year, right? So at the moment, at the next meeting, 67%, 0.25, already 33% for 0.5, right? So the numbers are going to be super aggressive. Now, this sets us up for trading opportunities right now. Okay, now the Kiwi, you want to see how good the Kiwi economy is going, right? GDP pretty much negative across the board, but not as actually bad as what they thought. So Kiwi is still going up, right? But they're already on a sort of cutting cycle. That's going to be super aggressive as well. But excuse me, what I'm talking about is from here, we see dollar weakness. So there's chances here to get into this. Like Aussie employment numbers today could be an opportunity. Right, I actually might have a chance to get this meeting put on for a live session, because we've got dollar weakness in the market, okay? And we get strength here, Aussie shoots up. It's like an easy trade. The easiest trades are straight after the meeting, especially the Fed. They've cut rates. They've told us what they're going to do. The cards are on the table. Now we can actually move these other cards and go, right, what does this one do? Well, they're going down. If this is strong numbers, then it goes up. Of course, if it comes out weak, well, it really diffuses the situation. But that's what I'm saying. Now, as we come into the market, we've got the Bank of England today as well. Now, no change expected. And I would think with those inflation numbers yesterday, there'll be no need for a change. So the move for the Bank of England will come out of the bit of the statement, bit of the press conference, but this is not going to be as lively as the Fed was, right? So Bank of England, it's an important event. Check it out. I mean, who knows? There could be a miracle 0.5% cut. There's no need for it. So we'll see how that plays out. Now, once again, initial jobless claims, Philly Fed business index numbers. So, and existing home sales. There's a couple of things coming out here. We start to see weakness in these numbers, right? The dollar will fall quickly. Right? These are second, third tier numbers, but it doesn't matter after the central bank meeting. Okay, we've told us what's going on. 33% factored in for a 0.5% cut. We start to get weakness in these numbers here. That's going to start going up, and it's going to move the dollar down, right? Equities up, dollar down, euro, sterling, Aussie, Kiwi up. It doesn't get easier than this, right? So pay attention to what's going on in the market. Feel the market out. But I'm sort of sitting there with like, there's no way I could be sitting here thinking, gee, the dollar's going to bounce from here. Like, there's no chance, right? It's like the best thing, and I didn't trade the Fed on purpose. because you want to avoid this. And if you have managed to avoid this, this is a great sign because it flushes out all the wannabes, all the loose money, trying to chase the big trade. No, that's gone. They're out of the market. Now we get on with the real move, and that is dollar weakness, right? I expect euro to go up, sterling, Aussie, Kiwi, and, well, dollar CAD, as I said, I don't expect that to do too much at the moment. Dollar yen start to drifting lower, dollar Swiss, dollar index. Now, the interesting part to this is, like, right now we have dollar weakness, so we have the edge. But in a week's time, we've got these like Europe or London, Australia, New Zealand, Canada for that matter as well. These countries have got their own sort of cutting cycles in play, and that's where we need to start factoring that in as well. Obviously, the ones that are on hold at the moment, that's the RBA and most likely the Bank of England. Okay, 73% no change there. Aussie, 90% no change. Obviously, the Bank of Japan, let's not even worry about those guys. ECB, no change, 72%, right? So basically, you're looking across the board here. Okay, the Kiwis, well, they're looking to cut. But the rest of them, okay, these currencies should go up, right? All we need is a little bit of help from the fundamentals. So keep an eye on your calendar. Look at the numbers. Right now, I'm looking for opportunities to get long euro, sterling, Aussie, Kiwi. And I think we'll see a big follow through. Once the dust settles, like during the Asian session, maybe even tomorrow, the dollar will start moving as the hedge funds readjust everything they're doing and start putting in projections for where things are going, and their positions will change, and that'll see the dollar move more aggressively. It's one of those sleepers. You think nothing's happening, and then all of a sudden it's 50 points up, and a day, 2 days later, it's 200 points up or down, depending on which one you're looking at. All right, guys, that's it from me. I'll give you more information as we go forward, but good trading conditions, great sign by the Fed. I love it when a central bank takes the bull by the horns, and because it makes it easier for us. All right, guys, have a good one. All the best. Cheerio.